Good day. It's Tuesday, December the 7th. I'm Martin Gago with Market Radius Research. Today, we've got CEO Brent Charleton of EnWave joining us. EnWave has developed and produces patented vacuum microwave dehydration technology and equipment for the precise dehydration of food, cannabis, and pharmaceuticals, as well as producing and selling food products using the same technology. I've got EnWave on for several reasons. I've known Brent and Executive Chair John Badusky for many years, and I've always been impressed with their focus and dedication to the company. I like the diversified business and revenue model, which is both one-time equipment and product sales, as well as ongoing recurring licensing revenues that has the potential to create a highly profitable and fast-growing company. While there's definitely risk, I think the company has significant upside potential and manageable downside risk, especially at these prices and with the strength of their IP and their balance sheet. But please remember, this is neither a recommendation nor investment advice. We're here to learn about the company, do your due diligence, and come to your own investment conclusions. Brent, thanks a lot for joining us today, and let's hear your pitch.
Much appreciated, Martin. And I think you've done a phenomenal job of summarizing our business. I might be done. We can finish the webinar now. But in all seriousness, I'll walk through some of the general introductory points to our business for those who don't know it, and then we can dive into some more detailed subject matter pursuant to our business development pipeline and more recent commercial announcements. I'll start off by introducing EnWave. We're an industrial technology company that's developed a proprietary vacuum microwave dehydration method that offers significant value propositions primarily for the food and cannabis spaces. But yes, as Martin alluded to, we are active in the pharmaceutical space on an R&D basis. Before I continue, I'd like to draw everyone's attention to our disclaimer regarding risk factors and forward-looking statements that may be made through this webinar. I can almost guarantee you that I'll be providing some guidance for the forthcoming fiscal year in 2022. What separates EnWave from other OEMs is the dehydration industry is that we've proven commercially that we have the most reliable and scalable vacuum microwave technology in the world. This fact, combined with our robust experience using this technology, allows for the acceleration of product and process development as we collaborate with a number of large, medium, and small companies globally. Our technology, as also Martin noted, is patented. We have almost 20 patents that are a variety of apparatus patents protecting the machinery design, but also process-specific patents. Most recently, we've applied for patents protecting high sugar content liquids for honey drying, and also our terpene max process, which is very specific to cannabis drying and optimizing the outcomes for that. We put this sophisticated know-how to work on a daily basis, again, working with a variety of companies evaluating our tech. Let's talk a bit more about the technology. When you combine vacuum and microwave energy, the right way that is, you can create a controllable low temperature drying method that will uniformly remove moisture and enable the user to create precise product outcomes, i.e. variance is in terms of final moisture content, which will dictate texture and ultimately the consumer experience. And we refer to our vacuum microwave technology as radiant energy vacuum, or REV for short. The speed of REV processing is much faster than alternative drying methods. That includes freeze drying and air drying primarily in the food and cannabis spaces. And of course, I guess more so for cannabis, rack or room drying, which is a iteration of air drying. More specifically, REV dries food products in typically 25% less time than the incumbents that I've just mentioned. And for cannabis drying, premium quality buds for smokable use or plant material destined for extract purposes in less than 2 hours when compared to multiple days of room or rack drying and the curing that would take place before it's been taken to the consumer. That's a remarkable difference. Further, the footprint tends to be far less, which creates certain economic advantages in the different industries. Primarily in the cannabis industry, it's a higher allocation of footprint towards growing and producing more product versus allocation to drying, as there's a limitation in the square footage that's been licensed for their use. Albeit we're growing our commercial footprint primarily in the food and cannabis industries. As I mentioned, pharmaceutical is a space where we're still going after the blue sky. And we've proven at pilot scale that REV is far faster than lyophilization, which is the fancy pharmaceutical word for freeze drying in that space. And it offers continuous processing, which is markedly different from batch lyophilizers. We've also found, not through our own efforts, but through Merck Pharmaceuticals' intense research program, that we can increase the uniformity of drying of certain vaccinations and reduce energy consumption while maintaining efficacy, which would be expected in that biopharmaceutical product. So to develop this opportunity with minimal investment made by EnWave, given our lack of formal expertise in the pharmaceutical industry, we signed a joint development agreement with GEA Lyophil, who are the global leader in lyophilization equipment, and are also now working very closely with Merck to potentially scale up the use of our REV technology for a variety of vaccinations. We've also engaged with AstraZeneca on a trial basis to dry certain monoclonal antibodies. And I can't name them, but if you think about the top pharmaceutical companies in the world, they certainly have reached out to EnWave and or GEA to evaluate our pilot scale equipment, either here in Vancouver or now in Germany, as GEA has purchased a pilot pharmaceutical drying piece of equipment to demonstrate on an ongoing basis.
Brent, in the pharmaceutical space, things take a long time with trials and all sorts of certifications and so forth. You've been sort of working within the pharmaceutical for a while. You've got these relatively new agreements. How long of a sort of a time frame or horizon would investors expect to start getting some news flow and then maybe even potentially some revenues out of this?
Well, I've been working with EnWave now for just over a decade, and I recall that the first interaction with Merck took place in 2012, and then we consummated a relationship in 2015 and kept working on that. So we're talking at a minimum 5 to 8 years of development. That being said, the work done with Merck now translates into a more advanced starting point with these other companies, where we now have a piece of equipment that they can test and trial. So ideally, we'd like to see that timeline shortened between 3 and 5 years for prospective adoption. Okay, moving forward, we're monetizing our innovation, our IP, our technology, the equipment, and the know-how in 4 distinct ways that I think are all complementary in an effort to try and exploit the technology that we have. First and foremost is the license of our technology to food and cannabis companies in exchange typically for a negotiated carried interest in the form of a royalty tied to either revenue generated through the products that are produced using our tech, or on a per unit basis, or in certain cases, it can be time-based. So a minimum annual payment that is broken down on a monthly or quarterly basis that we feel is adequate to compensate EnWave for the significant investment that not only ourselves, but our investors have made over the past decade in terms of the dollars invested into the business. We also, of course, sell the equipment at a pretty appropriate margin. I won't disclose it on the call here because every deal gets negotiated differently, but we're proud of the margins that we were able to achieve this past fiscal year, and we're confident that they'll continue to be robust in fiscal 22. Third, we're in the process of starting up a toll or co-manufacturing facility with a large-scale REV line here in Vancouver, and the purpose of that is to offer companies the ability to take material amounts of REV dried product to market to hopefully then justify business cases to bring manufacture in-house. So we look at this as an acceleration tool and not something that's going to stimulate massive revenue growth, but more so stimulate hopefully massive adoption of the technology from more and more companies.
So just, yeah, I'd like to sort of drill into that a little bit. So like currently, if someone wants to use your system, they buy a small sort of test system, they run some trials, and they can, I forget what your different megawatt sort of sizes are of it, then they'd have to sort of outlay a system and get those processes in. This way, they can send you a bunch of blueberries or whatever, you guys process for them, and then they can kind of do test marketing and sort of figure out the product in the market. And then if once, or hopefully they get big enough, then they can buy their own equipment. Is that kind of how it goes?
Yeah, it's very, very close to that. The majority of food products that are being developed in collaboration with these companies are new and innovative applications. So there's a higher risk to bringing those products to market. And so how we view RevWorks is a tool that will enable them to bring that product to market, to prove that it actually does resonate with consumers, and then compel them to bring manufacture in-house. All the while, we're pushing them in that direction because the pricing associated with toll manufacturing is going to be less advantageous than in-house manufacture. So that's the purpose of RevWorks, and without RevWorks, there wouldn't be an option for these companies to take product to market in a meaningful way to test the business case. There simply isn't another vacuum microwave toll drying facility in North America, or one that we know of even in Europe. So we see this as the first of its kind offering, and we're hopefully going to announce our first clients in the early new year, calendar new year here, and they include some pretty notable companies.
And that would be like, the point is to get new customers, you buying equipment and getting into these long-term royalty deals, but it would be still a for-profit business. There'd be positive gross margin and all that as well associated, right?
Correct. Well, anticipated correct. we're modeling it out where, we will make an adequate margin from providing the toll drying services, and that, on an annual basis, as it's operating at, call it 50% capacity utilization, it should be profitable. Anything above 50% will then, of course, add to our bottom line. And so, we're hopeful that we can achieve, look at the goal to the end of this presentation, but 75% capacity utilization is our goal by the end of fiscal 2022.
So you've obviously been talking to clients about it, and you're getting a lot of interest, or?
Yeah, so it's the cart before the horse. The facility needs to be completely ready for production, which is anticipated later this month. So it should then start in January before we can sign supply agreements with these potential clients. And then for the larger companies, they'll require certain certifications, SQF being the penultimate one, which takes 3 months of operating time in the facility to get. SOPs have to be established. And so we foresee the first wave happening with small to medium-sized businesses with January to March. And then from like April onwards, hopefully landing some of the bigger fish who are waiting patiently for the SQF to be granted, hopefully.
Okay, so this is definitely 2022 business hopefully on the come here.
Yes, definitively that facility will be used for commercial production in fiscal 2022.
All right. Okay, thanks.
Yeah, no problem. And then lastly, we have a wholly owned operating subsidiary called nutraREV Food Company out of Washington State that produces a line of consumer snack products, most notably moon teas. And we'll get into the details of that business. They had a tough go in 21, and we went through a restructuring exercise. And now with a new management team in place and some near-term opportunities on the horizon, we're confident that nutraREV will be back in a very strong position by the end of fiscal 2022. So moving forward here, in terms of the total addressable market, this is the value of the product. So not necessarily how many machines we're going to sell to add up to that number, but if we're taking a royalty off of that value, that becomes more meaningful to the investor. So we've identified the total air-dried market, freeze-dried food market, and of course the global cannabis market, which we all feel internally here that we can address through the value propositions that we're offering through REV.
So just to be clear here, for the total addressable market, the TAM in 2025, over $250 billion worth of freeze-dried or dried product is sold, be it cannabis or whatever. It's not how many.
Yep, the value of the market. The value of the market. Correct.
All right. Okay.
And so to date, where are we on the commercialization journey? We've signed 49 royalty-bearing licenses with companies spanning 23 different countries collectively. And the majority of these licensees are using REV technology currently for fruit and vegetable applications, dairy applications, so shelf-stable cheese, yogurt, and highly functional ingredients, as well as cannabis in the legal and recreational and medical markets. Our licensed partners include PepsiCo, Arla Foods, which is a top 10 global dairy company, more recently Dole, which many of you should know from buying bananas at your local grocery store for your entire life. Hobby, which is the largest snacking company in Japan and has an international distribution presence. U.S. Army using the technology to develop military rations, amongst many others. So pretty exciting portfolio of licensed partners. But if I was to summarize where we're at today and where we want to go, is that we have attracted the attention of some very high potential business relationships, but now it's time for the rubber to hit the road. So for these companies to take the technology and mature to the next phase, meaning multiple large-scale lines being put in play and more material amount of REV-dried food product and cannabis materials being brought to market to upsize the diverse royalty portfolio that we're aiming to build here. Okay, so moving on to nutraDried, I would say the elephant in the room for entire fiscal 21, which obviously ended on September 30th. For the first 2 quarters, that business was being run by a separate management group that was reporting to our board of directors and had presented a plan that we all believed to be attainable. Unfortunately, it was grotesquely I'll say that. The anticipated sales didn't match up with the overhead expenses and the marketing spend that was taking place. And so we had to step in February to restructure, make a change, significantly reduce the expense structure in the business. And that took effect and started to see that in our financials for Q3, and we'll see that for Q4. And by doing so, we feel that nutraDried is in a good position to get back to profitability in fiscal 22. We found out that a number of the business opportunities, both in bulk sales of the product and also private label, were turned down, and that the former management was more focused on brand building for that Moon Cheese moniker. That's completely changed, and we don't discriminate against buyers now. We're just looking to build volume and to gain some economies and obviously reduce our expenses through those additional deals. We're also going to be introducing some new products to market in the Moon Cheese portfolio, and also some things that may not fall under the Moon Cheese brand in fiscal 22. And we're really excited about the initial responses we've gotten from brokers and buyers in the grocery and club distribution channels. More news on that to come quite soon here. Most recently with nutraDried, we did announce that they've won a Canadian club distribution opportunity. It is Costco. It's going through the Costco ecosystem. Forthcoming in the new year in Canada. And we've also recently gotten positive feedback from several US divisions that are looking to take the product in fiscal 22. So the Costco relationship is very much alive. And then, of course, we're working on building our relationships with Walmart and Whole Foods and what have you to make those more impactful to our business.
You were in Costco previously, is that correct? And then you weren't, and now you're kind of back in these 16-week or 12, sorry, however week trials. Is that like a trial, or is it just sort of a seasonal item? And if it does well, you could be in there year round, or?
Yeah, so historically, when Moon Cheese was introduced to Costco, it did quite well. Velocities were good, and we had the opportunity to expand into different divisions, and that led to the offer to be part of a most valuable member program. And so we did participate in that in 2019, and that was a huge stimulant to both top line and bottom line for nutraDried. Unfortunately, after the MVM finished the first one, the number of orders that came through from the different divisions went down, and the management at the time didn't tailor down their manufacturing. And so you got inventory building and sales not matching inventory. And then you're stuck with too much inventory and nowhere to put it. And that led to a second promotional opportunity with Costco, which was a buy one, get one opportunity to liquidate the inventory. And that was sort of the tail end of 2020. And so that took place. We turned dry cheese back into cash, but it really tarnished the reputation of the brand within the Costco ecosystem, and buyers were less inclined to take it on as an everyday item for rotations. So it took a lot of effort from our new management team to go back into that ecosystem and develop some unique product offerings to win back the confidence of these different buyers. And you know, the result is we have another MVM opportunity in Canada. We have specific rotational opportunities in the US. And there's some other things that we're working on behind the curtain here that can be far more meaningful and impactful to nutraDried than any past Costco relationship.
And just to be clear, Costco doesn't have one central buying. They have different regions, and a certain region buys for there. So you're in Western Canada, that maybe gets you a foot into the door in Eastern Canada, but they all make their kind of own decisions, right?
Yeah, to my understanding is that each buyer has their own individual choice on what products they put into their stores. And of course, they take the advice of their colleagues, their other buyers, and they'll get the data from the performance of products in different divisions. And high performing products will likely proliferate the Costco ecosystem, and the poor ones, they won't get past, one division. And so the goal for nutraREV here is, now that we're back in the door with them, is to perform well in store. And it's not going to be just the standard moon cheese that everyone who's tried it knows. I'll go to the next slide here. We have a new format that's coming to play, something that resonates far more with the consumer than, say, a ball of cheese is your classic cheesier or Cheeto analog. And so similar to, if you were to buy potato chips, the variance in flavor may not come from the actual substrate being potato. And in this case, we're using a specific cheese. We're seasoning the cheese in a variety of different ways. We've tested this and we've brought it to buyers. And again, feedback has been very, very strong. And so in fiscal 2022, you're going to see this product hit in the market in a very meaningful way. News to come here in some big retailers in the US, and also hopefully in the club channels. So if we look at the royalty licensing business in fiscal 21, we signed the most licenses we ever had in a 12-month time period. And obviously, consequently, we were through 3 quarters profitable and are in line to hopefully continue that trend moving forward. We're also able to install more machines, which is critical, obviously, to increase the number of royalties and the size of royalties that we'll be collecting on an ongoing basis. Most importantly, is we signed 2 licenses, respectively, with large United States multi-state operators in the cannabis business. And that was after some robust testing and proving to them that what we were claiming technology could actually deliver. And so we're looking at those particular licenses as ones that could grow into repeat large-scale orders in fiscal 22, and also pointed them as called showpieces for other potential adopters to go and evaluate, and then hopefully make their own purchase order decisions.
When you talk about a licensing deal, that implies as well that first you have to sell them a big hunk of equipment, your machines, and then they license it, right?
Yep, and it's probably a good opportunity to differentiate between the food and cannabis industry, in that in the food industry, as I mentioned, the majority of applications are quite bespoke. They're innovative, hopefully can carve out a unique competitive advantage in certain verticals for our adopters. And so our licenses are typically exclusive to start and are pursuant to minimum royalties being paid on a scaled up basis for the first 5 years of adoption, and also purchase order requirements tied to those exclusive licenses. If they fail on any of those fronts, the license then switches to non-exclusive, and they're still responsible for paying the carried interest, but we can then go out and engage with competitors to bring the same types of products to market. In the cannabis industry, it's cut and dry in terms of cost reduction on a per gram production base and an increase in quality. And a lot of the IP in the cannabis industry is strain specific. So by offering, a reduced cost and shorter time period of dry and a higher quality, there's no exclusivity. So we basically will be able to sell our technology to any cannabis company that wishes to adopt it without any conflict with exclusivity provisions. And so every company that does adopt our technology does have to buy equipment up front. Typical margins are somewhere in the range of, call it 25 to 30% gross margin. But of course, that depends on the project and how many machines they're going to commit to. And we want to make it approachable, but still obviously cover a lot of our overhead expenses in the process of selling those machines.
When you talk about exclusivity, to be clear, someone will buy a machine and say, we've got the exclusivity to dehydrate bananas or something like that. And then they're the only ones in that geographic region able to do that. But down the street, someone could buy a machine and say, we're going to dehydrate strawberries or something. And then they would get the exclusive license for that. Is that kind of how it works?
Yeah, you can get that granular. We try to allow for as much flexibility and use of the technology as possible, because we want our partners to be very successful and generate copious amounts of royalties. But it depends on what's important to them. And so we carve it out by geographic processing exclusivity, typically, and product type with as much detail as we can. For example, our folks are over in Barcelona, Spain right now. installing a 100 kilowatt continuous line for a company called Patatas Fritas, who have historically been big players in potato chips in the region. And now they're going to complement that offering with a portfolio of dried cheese snacks similar to nutraREV. And so they have the exclusivity for Spain. And so we've agreed with them that we won't grant any additional licenses to companies that want to domicile REV equipment in Spain to compete with them in the dried cheese snack space. So it provides them with a little protection, competitive advantage as they try to build their business.
Right. And for them to maintain that, to clarify, they have to hit certain production or pay certain levels of royalty to you. And if they don't hit that, then you say, hey, you're not sort of fulfilling your side of the agreement, and somebody else wants to buy a machine to make cheese balls or whatever in your region. And because you haven't hit your milestones, we're going to let them produce that.
Yep, that's right. But they'll always have an opportunity at the end of calendar year to true up the minimum royalties owed. So if they're short 50 grand, they can elect to pay the 50 grand to keep the exclusivity before December 31st, or not pay it and continue on a non-exclusive basis. And they'll still receive the same amount of support, both on product development and manufacturing from us as they would if they were exclusive. It's just they lose that edge.
Right.
So I'd like to dive into a relationship that I feel to be material to EnWave's future, at least over the next 12 months and beyond, is with Dole. And so this is a relationship that evolved over a year of going back and forth with senior executives from this organization to fully understand what their priorities are as they are maturing from a primarily fresh produce offering to one that will be looking more to shelf-stable snack iterations and shelf-stable functional ingredients. And so I know that they're looking at EnWave as a platform, a key platform for the future of what they can bring to market. And so we entered into a global strategic partnership where we have now 4 separate projects on the go. One that is most imminent with some snack products forthcoming. I'm excited once they hit the market to point to where you can go buy them and support the project and enjoy what they've developed. And then we're also looking at different ways to help them upcycle product and make that commercially viable. And right now they don't have a structure for certain products in certain regions to accomplish this. And so this is something that could be material to EnWave in terms of the scale. So historically, if we had sold, one large machine to a partner, that'd be deemed a great success. The capacity that would be required for some of these projects would be in the multiple large-scale machines if the projects come to fruition. And for that reason, we have dedicated a significant amount of internal resources to ensure that Dole has all of the right information to make the right decision for each of these opportunities. And so it's something that I think could come to a decision point, certainly in Q2, Q3, fiscal 22. And I'll leave it there and just say that this is something that is really exciting about the investment case and where we're going as EnWave. Another project that's coming to a critical decision point is with aforementioned Calbee, who have purchased 3 of our 10 kilowatt units, have been launching product to market in Japan domestically, and will be coming to do a line trial on a larger scale 100 kilowatt machine with the same products they're producing on a 10 kilowatt in the early new year. If successful, we're hopeful that Calbee would move forward and adopt technology in a more material fashion, similar to what we're hoping with Dole. And from there, Calbee's products are distributed globally. So if a few of these products really get traction, then we could foresee Calbee as one of our biggest partners in the future. And then the last project I just want to highlight, and there's many, there's 49 licensees, is the U.S. Army and where we're going with that. We were told that funding for large-scale processing equipment was approved. I'll put that in like air quotes here. But it now comes down to the funding being released, and with government changeover, the anticipated release date of that would be in the latter half of 22. But if successful, we're hoping to provide the U.S. Army with large-scale vacuum microwave processing to be domiciled at one of their industry partners. The license would be held by the industry partner. They would provide it to the U.S. Armed Forces, and the industry partner would pay the royalty back to EnWave. So a few iterations of what they're working on are on the screen here. The bottom left-hand corner, that's actually cheesecake. So how can you create a shelf-stable cheesecake that has attractive texture and caloric content for the modern-day warfighter? Turns out you mix the crust in with the cheesecake or you put it in the middle, and that's the best way to do it. And then also they're doing some agglomeration work with certain dried fruits and vegetables to try again create phytonutrient-rich bars that take up the least amount of space and can be carried through pretty harrowing conditions. So, as mentioned a few slides earlier, we view the U.S. cannabis industry as one of the largest near-term opportunities for our business. Tech's proven. We have a patent-pending method, Terpene Max, refer to that, and we have a number of large-scale installations that are either already operational or anticipated to be operational in the coming months here that we can point to and get potential adoptees to go and visit these facilities. We have already negotiated referral agreements with several of our current licensees, which will encourage them to allow other companies to come and see their technology. So we have to make that advantageous. Otherwise, we don't have access to large-scale processing equipment in the cannabis space. It's really hard to close deals.
So sorry, just to clarify, they'd get sort of a finder's fee of sorts if a competitor comes in, checks out the equipment and says, oh, okay, this works well. And then so they're incentivized to open up their factory to a competitor.
Yes, exactly. And in the United States, if someone's operating in Illinois or California, and typically they're okay with someone from New York coming to check out their facility, but they wouldn't want the company that's operating next door to them in California to come in and see. So we'll incentivize them that way and ultimately be forthright with the potential adoptees about the arrangement. So they know to do their own due diligence before obviously buying their own equipment. So, the reason being where our focus is primarily on the U.S. and no longer on Canada, we will obviously entertain inquiries internationally in Europe and Australasia, but 80% of the estimated $21 billion global market is in the U.S. So it'd be foolhardy for us to place inquiry right chips anywhere else. Mentioned that we sold the 2 large machines to U.S. MSOs. We're looking at prospective repeat orders from both those companies in fiscal 22. And that's going to obviously coincide with the timelines for other facilities being built out. But we're looking at some pretty robust opportunities for both royalty growth and I think further testament to the technology that yes, it works exactly how we're describing it in the cannabis space. In Australasia, the past 3 orders we've received have been GMP, so that's good manufacturing practices. The pricing on those 10 kilowatts are actually far more than our traditional 10 kilowatt, given the need for the componentry to be traceable and the documentation that obviously aligns with GMP certification. And so we'll have our first 10 kilowatt GMP model installed in January in New Zealand, and then another 2 that will be going to Australia in around March or April for commercial use going forward. So mention is one thing to say that the technology works and the process is adequate, but data gives the black and white story here. And so from a robust research and development program that we put in place with one of our current US MSO partners and Gentle Dry Tech, which is one of our licensees using a 10 kilowatt as a mobile drying unit in the United States for cannabis, we were able to dry several strains and then compare to controls. And on average, we saw between 30 and 50% more retention for each particular, terpenes for each of the strains that were dried. And that was really, I think, the final check that needed to go on the box before our current partner decided that, yes, they would invest in a large scale 120 kilowatt machine.
Besides this, do you have any other economics? I don't know, I'm sure you have them. I don't know what you can share with us about how much it improves the cannabis growers or the producers, their efficiencies, or what sort of the value is to them?
Yeah, yes. So short answer is yes. Working through a return on investment process with each particular adoptee is different priorities, different waste streams that are then being turned into commercial product. and different priorities, whether it be labor reduction or footprint consolidation. But each of those variables are intertwined with the specific ROI calculations for the adoptees of this tech. So yeah, I'll list them off. Reduce energy consumption, reduce labor, reduce footprint, which can then be reallocated to different uses in store. The capture of terpenes in the condensate, it can then be either repurposed, reintroduced to the cannabis product, or used for derivative edibles. Those are some of the key factors that are considered, along with obviously the CapEx, how much product is going through the machinery, what is the pricing that they get in market versus their cost per gram production. All those things are considered.
Does it produce a more consistent product or a higher kind of quality one where they don't have to worry so much about mold or things like that? Or I guess consistency is key for food manufacturers, that every batch or each output is the same as much as possible.
Thanks for reminding me, because those are two key points that weren't covered off in the variable summary. First is repeatability. So processes, once they're implemented into the operating system of the machinery for specific strains, can be used over and over and over again, and you're getting a uniform dry on the cannabis that's going through the machinery to a very specific moisture content optimal for its intended end use, whether it be combustible or for taken on for extract process thereafter. And then second would be the bioburden reduction, because from harvest to dry takes hours, not days. There's less opportunity for the proliferation of bioburden, mold to take hold and have costly large batch write-offs. And also, because we're processing the material so fast, you don't have multiple strains being dried in the same room where there then is cross-contamination of terpenes. And if you're doing different strains in the same room, you're not going to always have the consistent end product quality that some consumers specifically look for that are connoisseurs. So there's a number of different advantages to using REV versus traditional means. And it's, I think, more so an education process now and a showcase effort for us to achieve additional adoption in the US market here forthcoming. Okay, so I'll move forward to RevWorks, just briefly touch on it. This is a project that for some folks that have been following our story may get a bit frustrated with, because it's taken longer than we expected. Trust me, it frustrates us too. Thankfully, the cost overruns have been minimal, all things considered, and the primary contributors to the delay have been municipal permits, and that's pretty much it. And then readiness of machinery that we purchased. So supply chain issues have proliferated the global economy, and we were no different in terms of some of the componentry that needs to be in place before we can turn on the facility for commercial production. So the anticipated timeline is to have all machinery in place by the end of the month, start running through some tests in January, and then have commercial production available again to our medium and small client list to begin, and then achieve SQF certification, and then following that, bring in some of the larger companies that are considering RevWorks as a platform to launch new products to market. So as summarized earlier, nutraREV had a tough fiscal 21, and that's clearly reflected in the down consolidated numbers for the financials that we present. However, I said our licensing and royalty business had its best year ever in fiscal 21. Our Q3 numbers, EnWave X ND was profitable, signed, I mentioned, most licenses in 12-month timeline, and posted record gross margin. We had a 49% gross margin up to Q3 for the technology business. Currently cashed up and have no need to raise capital right now. And for nutraREV, what's most encouraging with the new management that's come into play and their willingness to collaborate and to deviate from just a purely brand building play is the opportunities that are present. We have the new product, the Moon Cheese Sticks product coming out, as well as some other products to follow that up. And the feedback right now from both club and grocery is strong. So by the latter half of fiscal 22, we should have both business units fully fit. Right now, we've got one that's fit and one that's in the turnaround mode. And so it might take a few more months before nutraREV gets to where we need it to go. But it's about closing orders today for delivery of material amounts of product in the new year. And that's the focus of nutraREV sales and executive group. Our annual numbers will be posted in the afternoon of December 15th, so coming up pretty shortly, and then we'll be holding an investor conference call the morning of the 16th to dive into any further details and questions that investors might have in response to those numbers. So yeah, looking forward to talking about that with the group. We're already 2.5 months into fiscal 22, and since September 30th, it's been rather quiet on the news front. Everyone knows that, and I want to state clearly that that is not a representation of the business development pipeline that we have. Historically, our business has been rather lumpy. We sell 1, 2, 3, 4 or more large-scale machines. That is material, each one of those machines. And so we foresee in Q2, Q3 fiscal being a consolidated time period where the majority of decision points are going to be made. There's a probability that certain deals can get closed off this month in Q1, but rest assured that nothing has changed in terms of the opportunities that are there for us to go and get and are actively working towards. RevWorks, we mentioned that had been delayed, but will be started up in the early new year. And our goal for fiscal 22 is 75% capacity utilization, which would make that business unit profitable. We're also working with our current royalty partners to scale up their manufacturing capacity. So out of what I provided with guidance of Q3 conference call of 10 large scale machines, 7 of those are prospectively from current licensees. We'll just need more manufacturing capacity. So we've got some good sight lines on the guidance provided. We anticipate to sell a lot more of the 10 kilowatts too, but most material to our business are the large scale continuous lines. We talked about Terpene Max. We filed for a patent to protect that innovation, and we'll continue to leverage that through the US and international cannabis markets. We're going to introduce new products via nutraREV, more on that to come. And we're targeting positive EBITDA in fiscal 22 on a consolidated basis, assuming that we can achieve our goals. With that, perhaps pass it to you, Martin. You can ask a few more questions, or if anyone that's participating today has questions, I'm happy to answer them.
Yeah, we've got a bunch of questions in from the audience, so thanks everyone for posting those. I've got a few that I'd like to just hit on, hopefully fairly quickly. First, on the Terpene Max, that's a protocol. Is that like a new software download you can put into an existing system, and it's sort of a, like, I don't know, like a software upgrade? It's like, give us so much more money and we'll give you the upgrade to get Terpene Max?
Yeah, well, I mean, our partners are already paying us royalties, right? So our promise to them is that if we develop something that's going to be advantageous to their operations, they get that as part and parcel of the license. And so the Terpene Max programs can be installed remotely. All of our machines have remote access, so our electrical engineers can get in there and do their work. And so it is strain specific, but the Terpene Max protocol is in an effort to maintain a temperature of drying which is well below 40 degrees Celsius, well below the decarboxylation point. And also with the lower temperature, you have a lesser propensity for degradation of the cannabinoids and also the terpenes flashing off of the flowers. So yes, we can do it remotely, install the Terpene Max program, but typically we'll send somebody to site to assist in the training of the operators so that certain nuances can be adopted.
So it's not an extra revenue stream for existing guys. You're giving them better service, so they're presumably going to be happier clients, and then presumably easier to sign up new customers because you have this additional expertise and technology for the cannabis space.
That's what we're hoping to do. You know, show exemplary customer or partner service, and have that reputation proliferate the cannabis industry, and have folks say, we want to work with those EnWave people because they do what they say they're going to do. They're always there to support during standardized downtimes on the machinery. So that's what we're hoping to build.
I think one of the, like, you guys have been around for a while, EnWave, and I think some people are like, why has it taken so long to grow and so forth? And I'm just wondering, over the last few years, how much additional knowledge have you gained in terms of processes and technologies? And is that helping kind of, or is that going to be an additional fuel to kind of accelerate now, where you had sort of good technology before, but now as you're learning through these thousands or millions of hours of product use, that you can solve the customer's problems even better now?
Yep. The gain know-how and the cataloging of that know-how, so it's readily available, has been critical to shortening the time period for decisions to be made. I mean, every company has their own list of priorities, and so long as the economic model and the quality of the end product is attractive enough, then companies will move forward faster. It's no longer a situation where we're presented with a blueberry, for example, and we're like, okay, let's try this, and this, and hopefully we figure it out. No, we already have figured it out. So it's really up to our sales team now to go and increase the number of adoptees for our technology on a go-forward base.
Gotcha. Okay. So just when you get the customer sale, I guess on the customer sales cycle, when you knock on someone's door now, some big food producer, do they know who you are, or you still kind of have to start from square one? It's like, we have microwave dehydration vacuum technology and kind of go through all that.
From my experience, that's gotten better, but we're not where we need to be yet. So it's gotten a lot better. More companies know of EnWave and the technology's capabilities, but it can always be better. So something that we're working towards is that global food industry recognition, and certainly global cannabis industry recognition as well.
Gotcha. And given that you guys have been doing this for a while and you've got a big patent portfolio, are you at any risk of sort of your patents expiring and then being open to new competitive threats as guys take that on? Or have you been able to sort of strengthen the patent with new patents with new add-ons, or whatever you call them?
Good questions. Our most important apparatus patents extend out until mid-2030s. So it provides us with good protection on the design of the machinery. And then we're further protecting our business by layering on the processing patent know-how. And so that will obviously protect certain applications being dehydrated using vacuum microwave for 20 years from the application date, assuming they're successfully granted. But we're doing our best. That's not to say someone couldn't figure out a better mousetrap. Like in any technology area, somebody can come up with something better. And how can we combat that? We have to continue to innovate. We have to continue to commercialize this technology at speed, and ultimately prove that our option is better than other options. Like, there are other companies who are trying to develop vacuum microwave technology and offer it at scales that don't match up with our scale, and they don't perform the way that our technology performs from our understanding. Given that we have a very uniform design, very reliable and repeatable. And so that's the reason why the 49 companies have chosen to license our tech versus going to buy an off-the-shelf version of vacuum microwave, because they're uncomfortable with the outcomes with the other, I would say, not as mature competitors.
Well, and it's pretty unique for a hardware equipment company to be able to charge a licensing revenues on the back, which I think says a lot about that, how unique your technology is. But I think it also probably says something about you're not just saying, okay, here are the keys, see you later. You're giving them, for those royalties, they're getting ongoing support and new innovations and so forth, like in the cannabis space. Is that right? These are like, we offer patented technology, but we are a solutions provider. Right, we're solving challenges that are brought for certain food applications to be dehydrated, and/or certain challenges that different cannabis cultivators are facing. And we're not only selling the machinery that can accomplish the outcome, but we're teaching them how to use it. And we're consistently developing new ways to use technology to get better outcomes, and then teaching them how to improve their own processing protocols. So to your point, this is not a transactional relationship where it's one and done. This is a long-term relationship, and I think it's part of the reason why some of these companies have chosen to work with us. All right. Switching over to REVworx, when it's up and running, just in terms of an order of magnitude scale, would this be like $5 million of revenue, 1 million, 10 million, 20 million? Like, if it's kind of running at, I don't know, 80% capacity or something, what sort of order of magnitudes wise, how big would it be?
So keep in mind the scale that we're installing is a singular 60 kilowatt and up to 3 10 kilowatts on site, so 90 kilowatts of capacity. And based on the margins that we're anticipating for that business and the capacity for certain products that are in our, call it, pipeline for clients, somewhere in the range of 2.5 to 3 million with 100% capacity utilization could be possible. But no contract's been signed yet, right? So this is very much still a negotiation on a case-by-case basis. But as an estimate, that's feasible to believe that particular facility could generate that revenue.
In the news, there's lots of supply chain issues in the headlines and so forth. Has that created any problems for you, or maybe even created some opportunities where people are like onshoring certain production and they want faster flow processes or anything? Any impacts of the global supply chain stuff on you guys?
A little bit, but not detrimental. So we've always stayed ahead of the game in terms of critical componentry and inventory. And so our most purchased model, our 10 kilowatt unit, we have 6 in fabrication, 3 are ready to go as soon as the POs hit our desks. And so we're not feeling like we can't deliver on the 3-month timeline that we tell folks that they're going to get a 10 kilowatt unit. And similarly, with a larger line of 5 to 6 month lead time, we don't feel like that's going to be challenging. We have found challenges with the GMP machinery in terms of finding appropriate suppliers that were willing to deliver on a time basis that our clients were expecting. So that's been interesting. And then logistics. So of course, logistics has been a bit of a nightmare. Trying to find appropriate sailings, and the cost associated with shipping right now is exorbitant. So that's always going to be a challenge, but right now it's really heightened.
Well, I've asked enough stuff. We've got a bunch of questions here from the audience, so I'll start lobbing them out at you. What is the selling price on average for a 10 kilowatt and a 100 kilowatt machine?
Our 10 kilowatts, we actually revised our pricing strategy last year because the margin just wasn't strong enough. And so right now the 10 kilowatts are being sold on average for $200,000 US, sometimes a little more, sometimes a little less based on certain customizations. 100 kilowatts sell for, on average, let's call 1.6 to 1.8 million US.
All right. Is the 50% utilization model assumption based on a single shift in RevWorks or 24/7 operation of RevWorks equipment within the client's facilities? Well, it's your facility. So anyways.
That's a good question. It's based on a single shift. So a single 8-hour shift. Okay. 50% of that, the number of days per year, would get us to profitable business component of EnWave.
All right. What is the status on US listing?
Status is we're currently traded on the TSX Venture, and we need to continue developing our business to get to the point where it makes most sense to evaluate whether an uplisting to the big board in TSX or a US listing is appropriate.
All right. Your NCIB plan, is that still active?
Yes, we just recently had it approved again by the TSX Venture Index. We have used our NCIB in recent times. However, there are certain rules around using the NCIB. If you don't already have it pre-planned, you cannot use it during blackout. And as folks know, we're reporting our financials on December 15th.
Right. Brent, how do you see the possibility of using REV to combat food waste by drying overripe fruit to sell them at an increased margin instead of having to throw them out?
The majority of interest for upcycled produce is coming for projects where they can't get product to market fast enough, so it's spoiling, versus overripe. So I guess that would be kind of the same scenario. And where do I think we play? I think we have an immense opportunity because of the elimination of the cold chain storage component in tropical locations in Southeast Asia and Australia and other locations to allow for the preservation of nutrition that doesn't necessarily need to be sold to first world countries too. There's a number of large CPG companies that have ESG mandates to provide nutrition to all. And so, again, won't speak too much detail on this, but there's something that Dole's looking at right now. And it could be again, material for our business based on the scale that they would need if they do move that project forward.
Can you re-elaborate the final 10% need to complete at the RevWorks facility? Are you only waiting on other suppliers?
Yeah, floor is down, 60 kilowatts in. We have our seasoner coming through. So some of the products that will be drying will need a seasoning component. So that's scheduled to arrive this month. That will get installed. And then the air dryer is scheduled for installation later this month too. So a lot of the fruit and vegetable applications require a hybrid process. And we've acquired a medium-sized air dryer to match up with the 60 kilowatt, which will be ready to go in January. And so you need all those machines in place before you can get the proper inspections complete and be stamped, for approval for saleable commercial product.
Right. I think you addressed this regarding your NCIB, but I'll ask a question that's written here. Why isn't your team accelerating the stock purchasing? It looks like you're dragging at monthly minimum or of share purchases, whereas stock value is truly undervalued. Get it done now.
Okay. I agree with the undervalued comment, but as I said, there are rules around the NCIB, and if it's not put in place, like we think about when we went into blackout, stock certainly wasn't trading at this level. And no, I would agree that at these levels, when we're able to do so, it'd be an appropriate use of company capital from my seat.
Right. When can we expect Moon chocolate?
Not in the foreseeable future. There are some confectionery items that are under development with different partners, but Moon chocolate actually doesn't hold up very well in a vacuum microwave setting, to be honest. Well,
yeah, I used to actually from the chocolate industry, and there's actually very little moisture in chocolate, so there's not a lot to dehydrate out of there. Actually, I just got a dog, a COVID dog, and she loves cheese. Like, wouldn't that make a great pet snack? I could have a pocket of doggy Moon cheese to treat them when I'm trying to get them to do my stuff.
I agree. I would ask you to keep buying lots and lots of Moon cheese and feed your dog with as much as you possibly can without making it sick.
All right. Any updates on the protection of IP battle, the court legal issue with former employees alleged to use EnWave's IP?
Yeah, the update is that the injunction remains in place and will do so until the injunction hearing occurs, which is currently scheduled for late January. And I can't say anything else until that happens, other than we are feeling confident about our position and are maintaining a very aggressive stance on the allegations that we're making.
All right, and there is another question here asking that, so I will pass that one since you addressed it. Which areas in the food sector will be addressed in sales in the next 2 years?
So outside of dairy, fruit and veg, which are, I think, the foundational verticals for this technology's commercial application, we see a huge potential in noodle and baked good products. So we're actively going after companies to hopefully commercialize that in a more meaningful fashion. And then also on the snack space in terms of formulations. So we've yet to see a company launch meaningfully formulated yogurt snack products or formulated fruit products. It tends to be just the raw material dried, seasoned, and sold. And so we anticipate that more of those applications will hit the market through 22 and hopefully continue forth after that.
Right. Concerning Moon cheese, are you targeting shops and store, but also are you also targeting airlines and movie theaters?
Yep, the sales team is approaching a diversified number of food service opportunities, which would include airlines, movie theaters, etc., as well as retail, grocery, club, natural channel, and then bulk. As I mentioned, that's a key growth driver for the business moving forward is the agreement to provide other consumer packaged goods companies with different dried iterations of cheese or dairy product for them to then take to market.
Right. Do any setbacks account for the recent share weakness? And do you expect to double equipment sales this coming fiscal year?
First on the share weakness, like I'm surprised where it's trading at right now, considering what's going on behind the curtain. We all knew after we did the restructuring with nutraREV that it was going to take a few months for them to get their feet back under them. And the plan moving forward for the rest of fiscal 22 is very optimistic. And we've had some near-term or some recent feedback from, I mentioned Costco and some of the other larger grocery retailers. That's on the right track. In terms of the machine sales, yeah, I'm sticking by the guidance of 10 large-scale machines, hopefully purchased in fiscal 22. Mentioned that Q2, Q3 should be a good lumpy period for decision points. And the scope of some of the projects, as I mentioned, aren't like singular large-scale machines. Some of them will require more, and that lends itself well to hopefully hitting the mark on doubling large-scale machine sales this year.
Right, and one final question here. Has there been any interest for someone buying nutraREV as the company, I guess, spinning off nutraREV, any interest from buyers on that?
Pre-COVID, when everything was humming, absolutely. It's hard to sell a dog, right? And so nutraREV was a complete dog that we're turning around right now into becoming a profitable entity, and it'd be very hard to sell it prior to becoming profitable again. So we're working towards that. Once we do, then along with Brad, the new CEO that we've hired, Dan, our CFO, myself, and John, our chairman, we'll look at different options to either spin that company out or sell it to a strategic or financial buyer. That had been the plan prior to COVID. We encountered some challenges, and we are working to completely overcome them now.
All right, and something I like always asking, you've addressed it, but maybe just to sort of summarize the highlights. In the next, let's say, 3 to 6 months, news flow wise, what should we be expecting? I guess the your rev work should get up and running. That's kind of, and then some more contract sales, or what should be on our radar for the next 3 to 6 months?
Next 3 to 6 months, I would anticipate material repeat orders from current licensees to upsize their manufacturing capacity. I would anticipate hopefully repeat orders from our current cannabis partners and the addition of additional US licensees in that area. Would anticipate nutraREV being able to confirm material new distribution for not only its traditional moon cheese product, but the sticks iteration in their portfolio. And I would also anticipate prospectively some complementary products being included into the nutraREV portfolio that could be produced at RevWorks. And that's one thing I didn't mention is at RevWorks, we've got a tray-based quantaREV system, and at nutraREV, we have the nutraREV basket system. So now within our corporate ecosystem, we have the capabilities of producing any product that we want. So if we don't have partners that are going to take something that we think is commercially viable to market fast enough, well, we have nutraREV to do that. And we have the manufacturing capability to do that. And I think we now have the sales and broker network to do that. So that's what you should expect over the next 3 to 6 months.
All right, Brent, it's we're over an hour here, so that's been great, very in-depth, lots of great questions. I thank the audience for those good questions. And with that, let's wrap it up here. So thank you very much for joining us, and have a great day.
Thanks, Martin. Take care.
Cheers.